want an exposure to a market or an
Everything they need in one place.
Being the world's foremost authority on individuals, advisors and institutions.
Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall, and here with me today is Michael Levy, manager of the Baring Frontier Markets Fund. Hello Michael.
Good morning.
So we're here today to talk about frontier markets. Emerging markets, they're sort of elder brothers, have done very well this year, outperforming developed markets. Is this the case for frontier markets as well?
Yes, frontier markets have had another strong year to date. They're up over 15% in US dollar terms. And this is on the back of a very strong 2013 when frontier markets are up 20%. We believe more and more investors are seeing the appeal of frontier markets. Frontier markets offer investors very strong growth opportunities, underpinned by strong demographics, under-penetration of consumer goods, services and products, and a resource opportunity both in the physical resources and the human capital resources. So frontier markets have very strong growth opportunities going forwards. And we think that's why frontier markets continue to outperform both emerging markets and developed market peers.
It seems to be quite contrarian to what's going on in the news with the geopolitical backdrop. I mean, even the Today programme is cottoning on to the fact that markets just don't seem to be reacting to all the sort of the noise and the crises that are going on in those regions. Is that sustainable, or does there come a tipping point where actually these things do affect the markets?
Well, I think political risk is actually having an impact on markets, both in emerging and developed markets. Russia is a very good example in emerging markets where political risk has had an impact and the equity markets have fallen. In frontier markets, political risk has also been discounted to a certain extent. So recent problems in Pakistan have seen a near-term correction in the market. We saw the issues in Argentina as well, partly political and partly economic, that had a small negative impact on the markets. But I think investors generally see political risk as one of the risks when investing in frontier markets. There clearly are other risks. But again, investors are very keen on the growth opportunities in frontier markets and are prepared to look through some of the political risk, given the opportunity. Additionally, valuations in frontier markets aren't particularly stretched. Look at the aggregate valuation for 2015, and frontier markets are trading at about 9.5 times P, which is very reasonable. So, it's fair to say that political risk is there. It always will be there in frontier markets, but it's something we have to manage as investors.
I think one of the other risks is perhaps the perception of lack of diversification within these regions. I know the Middle East takes up about a third of your portfolio.
Yeah.
For perhaps the uninitiated, they might just think that was a pure oil play. Is that the case?
No, absolutely not. Frontier markets are characterised by a global opportunity set. In Asia, we have markets like Vietnam and Pakistan. In the Middle East, markets like Saudi Arabia are opening up, and they really aren't just an oil play. In fact, if we take Saudi Arabia as an example, healthcare opportunities are abundant, and we are invested in companies operating in the private healthcare sector that are really benefiting from a structural shift in that sector, in which provision of healthcare is shifting from the public sector to the private sector. But in Saudi Arabia as well, you also have very strong consumer opportunities. In the next 5 years, we expect 2 million Saudi nationals to enter the workforce. And this includes a huge increase in female participation. And that gives consumer companies an immense opportunity as disposable incomes are rising in that region.
Michael, thank you very much.
Pleasure.
This is Emma Wall for Morningstar. Thank you for watching.